your skills and learn from a pro, you have come to the right place. In this video, we shall show you the trades we've taken recently and teach you how you can analyze the market like a pro. In the previous video, we looked at the basic market structure and how to find trades like this. Okay, so what we're going to be looking at today is the advanced market structure. And for you to understand better the advanced market structure, you need to first concentrate on the basic market structure. So let's take a recap of the basic market structure and how to find exact trades like this before we can proceed to the advanced market structure. Basically, what we're looking for with this kind of structure here is to target, try and take on the next impulsive move, which will happen maybe like this. Okay, so and I've marked my structure points here in such a way that I have a swing range. So what's a swing range? A swing range is this, that high and then the last strong low. This low is not yet confirmed if the market hasn't broken here yet. So if I'm marking my swing range, my trading range, I'll only use this as my trading range. So anything in here is just internal structure and I want to target that next impulsive move. Okay, so this is what we call a swing range. This is my swing low and my swing high. So what's a swing low? A swing low is that structure point that has imprinted a new high. That's a swing low. And then a swing high is that structure point that has imprinted a new low. So well, this is my swing range from my swing low to my swing high. Then I come up with this swing range. That means I'm going to trade this bullish order flow. Why is this bullish order flow? Looking at my previous market structure here, it's bullish because we are following in the direction, we have to follow the market in the direction of BOS, or break of structure. So did we have a break of structure here? Yes. What's this part that's happening right now? It's a pullback. What am I targeting? It's the impulsive move, the next impulsive move. So that's how we use this swing range in order for us to get that next big impulsive move. I'll be showing you a couple of examples, have screenshots of trades that have been taken in the previous weeks, and I'll be sharing them. Before we go to the next thing, the other thing we have to take notice of here is the strong and weak points. In the previous video, I told you how we get those strong and weak points. So let me take a recap here. These structure points are always in constant battle. They need to take out each other. So whichever point takes out the other is the strong point. So looking here previously, this high was taken out by what? By this swing low. Managed to take out this high, giving us a break of structure. So where is my strong point now? It's this one. This is my strong point now. Yeah, so I consider this to be my strong point now because it took out this one. It took out this one. Now I know that this is my my strong point, so I'll be looking for trades because a strong point is always protected. We don't expect the market to go anywhere below it. Yeah, of course it can go below it, but if it's really protected, in theory it can't happen. It will just be respected and then the market will move the other way. So one last thing we can look at before we go to the advanced market structure here is break of structure. So break of structure is when a structure point Remember the structure points I told you. We have the high, we have the low. So these are structure points. They are always in constant battle. So if this low managed to take out this high, then we have a break of structure to the upside, and we always trade in favor of the direction of break of structure. So when the market gets back here, we remember the direction of break of structure, it was to the upside. So, and we also remember that this is a strong point. Strong points are always protected because that's where big money entered in around. Big money that took out this high entered in around this point. So whoever entered here with more money can't allow the market to take him in losses. He would rather add in more money in around here to protect his entry positions here, so that he can even take out this one to make even more money. Remember, this is a zero-sum game. Everyone in the market wants to make money, but how do they exactly make money? By taking money from the other people, those people who aren't smart enough. Okay, so whoever bought here was targeting this and took out these people, and this was kind of an inducement. Okay, we shall be discussing more about that. Okay, ladies and gentlemen, the next thing we're going to look at is trend change with boss or breakout structure. So I've tried to mark all these structure points and where they are broken exactly. As you can see, wherever the high was taken out, I've tried to mark that, and then the low. So let me first identify these structure points for you so that you don't get confused. Okay, so we want to understand how to find out trend changes with BOS or break of market structure. Remember, with smart money trading, we are always trading in the direction of the break of structure. So once you don't know how to understand or how to identify your break of structure, then you're always off guard and you'll find yourself on the wrong side of the market. So I've marked these structure points, as you can see. So this is definitely an uptrend because, as we said in the previous video, and now I suggest that all of you know how to define an uptrend. Okay, so basically an uptrend is a series of strong lows taking out the weaker highs. As you can see, the basic market structure here is showing you that the high was taken out, the high was taken out, the high was taken out, and the lows were still intact. This signals that all these lows have been strong in this uptrend, and they were only weak when the market changed. When the market changed, how did we know that the market had changed? Look at this boss now. The break of market structure is to the downside now. Previously it was to the upside. The lows were continuously breaking the highs, continuously breaking the highs until when the market changed. So what we learn from this is that the market will never take a single direction for a long time. The trends always change. It will be an uptrend, and then it will turn into a downtrend, and then an uptrend again, and then a downtrend, so on and so on. It will never take the same direction for a long period of time. Okay, so that's how changes are, how the trends are. Okay, so understanding here that we had this bullish market structure, bullish trend. So the highs were continuously taken out until when one strong high appeared that broke structure to the downside, and then you see when this last strong point took out the previous high, and then the market decided to take out this strong point. That's when the market changed direction. So what do we learn from this? is that whenever you see a strong structure point being taken out, that implies that the market has changed. Or whenever you see a strong point that has previously taken out a weaker point, and then you see another point taking out that strong point, then that means this point is no longer strong, but the other one that has taken it out is the strongest point. So if you're looking to trade here and you've seen this high taking out the low, then I suggest you should be looking for shorts. You should be looking for short positions to go with this bearish order flow until when you see another strong point, in this case this high that previously took out this low, being taken out by the opposing structure point. That's when you have to change your mindset again and then realign it with the market trend, looking for buys in this case, and then you start to follow this bullish order flow. Okay, so that's how we get to know market changes with break of structure. Ladies and gentlemen, welcome to the advanced market structure series. And right now what you're seeing isn't a basic market structure you've been used to. This is the advanced market structure, and for you to understand this, I suggest, if you do not understand this very well now, you should be looking at the previous videos we've been discussing about the basic market structure. This is somehow complicated and it will take some of you off, like you lose it from here, but stick with me for a while. You're going to understand how to always find yourself on the right side of the market. So let's start. Previously on the best market structure, we had specific moves we are looking for. We wanted the impulsive move, not the pullback, but the impulsive move. This is all a complicated pullback, but this is what we want, the impulsive move. So how do you analyze this advanced market structure? So for you to understand this advanced market structure, you need to know a few things. As I can say, you need to know a few things. So let me first list them down here so that you can get to know what I'm trying to mean. You need to know certain things. So the first thing you need to know is the BOS, that's break of market structure. Then the other thing is you need to know the impulsive move, and then you need to know the pullback, and then the other thing is you need to know your structure points. In this case, a high and then the low, the high and then the low. And then one more thing we are going to add in the advanced market structure is the choke. Choke is just a fancy name for market change. It's more like a BOS, but this is something what can I say, choke is just the change of character. This is the initial move. Okay, most of the time it's internal, it's not the actual structure, but it does the same job as a break of structure. So I'll be able to explain more on charts. So these are the parts we need to understand right now, and if you do not know what these parts mean, I suggest you look in the previous videos. So number one is BOS, break of market structure. Do we have any? As you can see, I told you we mark it with that horizontal line. So that's marking the structure points. Structure points. Yeah, I'll be explaining why this isn't a structure point and this isn't a structure point and this isn't a structure point. Yeah, I'm going to be explaining this in greater detail, so stick around. So I'm done marking my BOS, my structure points. Then I need to understand where is my impulsive move. So looking closely here, my impulsive move This is my first impulsive move. The next impulsive move was here. This was a pullback, this move that was opposing the actual move, and so I suggest marking my swing range, my swing low here with my swing high here. Then I think this is a pullback. You see how we analyze? I think this is a pullback. So if I'm looking for a trade here, what am I looking for exactly? I want to get this next impulsive move that's going to give me a break of structure. Simple concept. But how do I know that this is a pullback? Let's get into greater detail here real quick. So previously I told you how to mark your swing range. So right now I'm going to mark my swing range. Why am I putting this swing point here? Because this is the last point that broke structure. Supposing that I haven't seen this move that I want to take in the market, let me say it's somewhere in around here. It hasn't happened. So this is my swing range. I'll be looking for buys when the market is below my 50% on the Fibonacci. So this is a modified Fibonacci. I'll make another video for the Fibonacci. So anything below that middle line is below 50%. So I'll be looking for buys when the market crosses this below 50%, and I start looking for buys to the upside. So I'll be explaining that in greater detail, but for now let's consider what we know. Structure points, you already know this, the high, the low. We have this new high, so we expect this new high to imprint a new low in around here. Okay, but how are we going to know that the low has been in place? This is where we are going to add in the choke. Okay, so what's choke exactly? Remember, BOS is when the structure point is taken out, but then again choke is the same as BOS on a minor level. So looking at this impulsive move, and then you can see this, we call this substructure in here. This is where we have that choke. Okay, you see, so choke is like BOS, but on a minor scale. On a minor scale. So choke will always help you to find out when a move has started or about to end. In the other scenario, BOS will always help you to find out that the trend is either continuing or the trend has changed. But now choke will help you here to find out if structural parts, these structural parts, the impulsive, the pullback, the impulsive, the pullback, have started or about to end. So in around here, I'll also mark my other choke, which will be here. So that's my choke. Okay, so now this choke here has helped me to find out that the pullback has started just after the impulsive move. The pullback has started, and now this is all the pullback. Now I want to know when the pullback is about to end. I'll check my choke. Yeah, if I want to know where when the pullback is about to end, I'll look for my choke. Once I see choke, then I know that the market has started to change even before the break of structure, because break of structure will happen from up here when the market strikes to the upside and breaks here. But see what you'll be missing. Okay, so basing on only these concepts, I'll be looking for a buy in around here. Concept number one, I know the structural parts. The impulsive leads to a pullback, leads to another impulsive, leads to a pullback, expect another impulsive. Okay, simple stuff. So Another concept we can add here, we should always trade in the direction of POS. So we have breakout structure to the upside here. So what do I expect? I expect the market to give me another breakout structure to the upside. See, so this is what I want to take. Simple stuff. And then another concept we can add is the structure point strength. This one is weak, this one is strong. Why? This one managed to take out the other one, giving us a breakout structure, and we trade in the direction of breakout structure. So what happens when the market gets close to this? This one will always be protected. Yeah, we perceive this to be a strong low, and it will be protected. That nothing will go below this. It will just be respected, and a new low will be imprinted in around here to break another structure to the upside. Simple stuff. All those confluences are telling me that I should be buying, and why shouldn't I buy? And then the last one we've added on is the choke. The use of choke. Choke will